Hi student, this is a sixth problem from the following trial balance of Shreya, Shreyas and Mrunal and adjustments you are required to prepare a trading and profit and loss account for the year ended 31st March 2019 and balance sheet as on that date. So we need to prepare a balance sheet on based on this trial balance and trading account and profit and loss account. So as of now we have solved many problems. So now I'm going to solve the sixth problem. So sixth problem, trial balance as on 31st March 2019, particulars. So particulars, debit and credit side. So capital account. Capital account is capital account. So two persons, Shreyas and Mrunal. These two are a partners. So purchases we have sales, bills receivable, bills payable. So we have purchases, sales, bills receivable, bills payable, commission, salaries, insurance for 9 months, and prepaid rent, sundry creditors. Next, sundry debtors, postage, freehold premises, furniture, bad debts, cash in hand, cash at bank, carriage inward and a carriage outward, stock. Stock is 1 April 2018. Returns, wages, outstanding wages. This is a trial balance, and we have the amounts also. So we know that how to pass the entries of trading account and the P&L account, and next is a balance sheet. So you can these are using the trial balance. We are going to make we are going to solve the trading account. So we have a closing stock adjustments. We can see first adjustment is closing stock rupees 30,000 and outstanding expenses salary is rupees 1200 rupees and commission is rupees 400. Then depreciate furniture at 10% and bad debts provide for further bad debts is rupees 1200 rupees. Next is goods rupees 500 rupees destroyed by fire and insurance company admitted a claim of rupees 2000 rupees. We have seen this adjustment also. And Shreyas and Mrunal are sharing profit and losses in the ratio of 2 is to 1. So the partners both partners are sharing their profits in a 2 is to 1 ratio. So now we will see the how we are going to calculate the trading account. So first one is coming trading account in a opening stock. To opening stock is how much? 22,500 rupees. This is the opening stock 22,500 rupees. So opening stock I had taken it here 22,500 rupees. Opening stock is 22,500 rupees. Next is purchases. Purchases how much? Purchases amount is 37,800 rupees. So 37,800 rupees will come here. So 37,800 rupees. 37,000 purchases are entered here. 37,800 rupees. Next we have less returns also, purchase return. So purchase return this side 1200 rupees and 1800 rupees. So I am taking it, so one we are considering for the sales, debit side thing is sales, and a purchase return is sales. Debit side is it is a returns, and purchase return is a credit side 1800 rupees, that I have mentioned it here. Less purchase returns 1800 rupees here. 1,800 rupees. After deducting 37,800 minus 1,800 rupees, we got amount of 36,000. We got amount of 36,000. This is the amount of 36,000. That is a net purchase. That amount is called net purchase. Next is to carriage inward. To carriage inward, it is coming in a trading account. So carriage outward is coming in Pendle account. So this I am taking a carriage inward. Carriage inward amount is 800 rupees. So carriage amount is 800 rupees. It is going in the outer column 800 rupees. Next one, next entry is wages. Wages is 3,100 rupees. So wages entry is 3,000. Wages is here. This is 3,100 rupees. I taken it here. Wages 3,100 rupees. Next, so now trading account debit side we have passed the entries. Now we'll see the credit account. Trading account credit side. Trading account credit side amount. Now we'll see the entries of credit side trading account. Now first entry is a buy sales. First entry is sales. It is 66,700 rupees. So in if you come here, so sales amount is how much? It is 67,700 rupees. I have entered here 66,700 rupees. Next, less returns is 1,200 rupees. Less returns is 1,200 rupees. This is coming here 1,200 rupees. So after deducting this amount 1,200 rupees and in a 66,700 rupees, we got amount as a 65,500 rupees. 65,000 after deducting 65,500, that is a net sales. Net sales is 65,500 rupees. Next entry is buy goods destroyed. Next entry is goods buy goods destroyed. So we have taken the opening stock and we calculated purchases return and sales return. Next is a goods destroyed by the fire. Goods destroyed by the fire and insurance company. So uh, this is the goods destroyed by 5,000 rupees destroyed by fire and insurance company admitted claim of rupees 2,000 only. So amount is destroyed amount destroyed goods is 5,000 but the insurance company claimed only 2,000 rupees. So first we'll enter this amount 5,000 rupees. 5,000 rupees. 5,000 rupees amount is here that we are mentioning in a trading account credit side. So that amount is here. Goods destroyed by fire, that is a 5,000 rupees. Next entry. Next entry is closing stock. Closing stock rupees is 30,000 rupees. That I have mentioned it here. Closing stock amount is 30,000 rupees. It's coming here and it will this amount will take in a balance sheet also, and this amount also destroyed amount is also, though the 5,000 it was and the insurance company paid only 2,000 rupees, that entry also coming in a balance sheet. This is the adjustment. Okay, next is, so after this we are going to calculate both side entries like a 65,500 rupees, 60,500 rupees, 65,500 rupees. It is 65,500 rupees. It becomes 65,500 plus 5,000 rupees plus 30,000. It becomes 1 lakh 500 rupees. 1 lakh 500 rupees. We got it. So this side credit side entry, and we'll see now debit side entries 22,500 rupees and 36,000 rupees and 800 rupees plus 3,100 rupees plus that so 3,100 rupees. After Deducting these amounts in 1 lakh rupees 500, 1 lakh 500 rupees, we got a amount as a 38,100 rupees. 38,100 rupees as a gross profit. So this amount will carry down in a debit side. That is a how much we got now, gross profit we got it as a 38,100 rupees. This is a gross profit. This gross profit I will take in a P&L account. So now we calculated trading account. So for the further calculation we are using a gross profit in a balance sheet. Sorry, gross profit we are taking in a P&L account. So this is a gross profit taken it here, 38,100 rupees. This is a gross profit. So we this is a gross profit brought down 38,100 rupees. Next we'll see the debit side entries in a P&L account. Next entry is to insurance. Insurance amount is how much? Insurance amount is 9,000 rupees. Insurance amount is 9,000 rupees. See this, you can see here. For the 9 months, it is a 9,000 rupees. Insurance 9,000 rupees. So we need to add, there is a adjustment for the insurance. So what is that adjustment? We'll see, adjustments. So that is insurance amounts, goods of rupees 5,000 rupees destroyed by fire, and insurance company admitted claim only rupees 2,000 rupees only. So goods worth rupees, it is 5,000 rupees. The insurance is company is paying 2,000 rupees only. So the for the business it is a 3,000 rupees is the loss. That indirect loss we are entering in a P&L account debit side. P&L account debit side, this is the amount. Outstanding for 3 months, this is a 3,000 rupees. For insurance adjustment, so 3,000 rupees is outstanding. We are adding with the insurance that becomes a 12,000 rupees. So next is salaries. Salaries amount is how much? 6,000 rupees. Salaries amount is 6,000 rupees. That 6,000 rupees I'm taking here. To salaries amount is 6,000 rupees. There is adjustment for the salary. You can see it here. So yeah, outstanding expenses salary is a 1,200 rupees. Salary is 1,200 rupees. We need to add with the salaries. To add outstanding salary is 1,200 rupees to, so both together it is a 7,200 rupees. Next is commission. Next entry is commission. So commission amount is coming in a debit side 2,400 rupees. We have a adjustment for commission also 2,400 rupees. Next for the commission we have a amount 400 rupees. We need to add with the commission because that is the outstanding expenses, that is 400 rupees. So 2,400 rupees plus 400 rupees, it becomes a 2,800 rupees. So we have calculated the outstanding expenses of insurance and salaries and a commission. Next, in the depreciation amount on furniture. Now we have collected these adjustments of, first one is closing stock. So we have completed a closing stock adjustment. Next, outstanding expenses of salaries and a commission. Next, we need to calculate it on a depreciation of furniture. Next, we have taken this one also for the insurance, how much it has destroyed. So we have left with the two adjustments. One provide for further bad debts, and six on shares and ratio, so how much they are getting a profit. And now we are calculating a depreciation of furniture at rupees 10%. 10% we need to calculate on a on a furniture. So furniture amount is, it is a 20,000 rupees. On a 20,000 rupees we need to calculate 10%. So if you calculate furniture 20,000 rupees 10%, so you'll get a 2000 rupees as a depreciation. So to depreciation furniture is 2000 rupees. So I'm calculating here furniture depreciation. Furniture depreciation is 10%, is 10%. So so after 10% we need to calculate this one. So we got 20,000 into 10 divided by 100. We got a amount as a 2000 rupees as a depreciation. This is the calculation of depreciation. So this becomes a 20,000 rupees as a depreciation. Next is bad debts amount is bad, bad debts amount is 500 rupees. Bad debts amount 500 rupees. I have taken it here, and add new bad debts. Bad debts new. So this one is a new one. New bad debt. This is a new bad debt, that is a amount of 1200 rupees. We need to add that bad debt amount with the bad debts. Bad debts amount is 1200 rupees. That was in a adjustment. 1200 rupees. So after including 500 rupees plus 1200 rupees, we got amount as a 1700 rupees as a bad debts. Now to loss by fire. So there was a fire, destroyed goods of worth rupees 5000 rupees, but insurance claim company paid 2000 rupees, but 3000 rupees was the loss for the company business. So that amount we are then direct in expenses we are taking in a P&L account, that is 3000 rupees. Okay, next is a postage is a how much it is, 1700 rupees as a postage. So we have directly we can take, there is no adjustment for the postage, we have to enter in a outer column. Next is carriage inward, carriage outward. Carriage outward is amount is here. The carriage outward amount is 1700 rupees, we have mentioned it here. So next is we need to calculate the by gross profit in a credit side P&L account. So credit side P&L account, we don't have any entries, so that we have taken a gross profit as a total amount. Gross profit, that is 38,100 rupees. We have taken it here. That is a 38,100 rupees. Then in a 38,100 rupees, we need to deduct these amounts: 1,200 rupees, the 12,000 rupees, 7,200 rupees, plus 28,000, sorry, 2800 rupees, 2000, and 7700 rupees, 3000, and 1700 rupees. This amount we need to deduct in a 38,100 rupees. So we left with the balance amount is balance amount is 6000 rupees. We got it here, 6000 rupees. So after deducting these amounts in a 38,100 rupees, so we got a amount in a 6,000. So the 6,000 rupees is a balance. So this amount 6,000 rupees we need to distribute to both partners, Shreyas and Brunal. So 6,000 rupees and 2:1 ratio we are distributing to partners. 2:1 ratio. So for a Shreyas it is a 6,000 to 2 ratios, and a Brunal it is a 1 ratio. So 6,000 into 2 divided by 3, we got a amount as a 4,000 rupees. 4,000 rupees here. And for the Brunal it is a 6,000 rupees. 6,000 rupees into 1 divided by 3 ratio. So we got amount as 4,000 rupees. So this amount is get from the Mrunal, 6,200 rupees. So we are giving it to Mrunal. So in a 6,000 we distributed to both partners, 4,000 rupees and 2,000 rupees. This amount will transfer into balance sheet. Balance sheet in a capital account. Transfer to capital account, balance sheet. So this is the 38,100 rupees, and 38,100 rupees is a total amount of the P&L account. And the gross profit, how much? It is a 1 lakh 500 rupees and 1 lakh 500 rupees. So this amount will calculate this amount will, this net profit amount will transfer to the balance sheet. We'll see, we'll later on we'll calculate a balance sheet. So we have completed with the gross profit, we have completed with the trading account and profit and loss account. So now we are calculating a balance sheet as on 31st March 2019. Liability side, inner column and outer column, assets and inner column, outer column. So we'll see the first capital account. When we find out the net profit, that net profit amount will transfer to the net profit amount will transfer into capital account. So Shreyas, it was a 4,000 rupees, and Mrunal, it was a 2,000 rupees. This both amounts will transfer into balance sheet. So capital account of Shreyas is 35,000. So capital account Shreyas amount is 35,000. His amount is 35,000. So I had taken it as Shreyas amount is 35,000 rupees, and his net profit was we collected in a balance P&L account, that was a 4,000 rupees. So 35,000 plus there is no drawings for this in this entries and adjustments and trial balance it was not given. So we directly calculate a capital account and a net profit. We got amount as a 39,000 rupees as a their capital account opening stock. Next is Mrinal, amount is 20,000 rupees. So his amount is 20,000 rupees. This amount is coming here 20,000 rupees, and his net profit was 2,000 rupees. We transferred from the P&L account to balance sheet. So how much he got it? Totally 22,000 rupees. So Shreyas got a 39,000 rupees and Brunal get a 22,000 rupees. So next, sundry creditors. Sundry creditors amount is 48,900 rupees, and this creditors amount is 48,900 rupees. We directly entered. And the bills payable. Bills payable amount is, here it is, bills payable amount is 6,500 rupees. So bills payable amount is 6,500 rupees. Then outstanding expenses we have calculated. There was a adjustment, that is a salaries and for the commission. So outstanding expenses of 1,000, outstanding both expenses we need to add. So we got amount as 1,600 rupees as outstanding expenses. Then outstanding insurance, outstanding insurance was 3,000 rupees. So I told you that this lost 3,000 rupees will show in a amount in a balance sheet, that is a 3,000 rupees. Next is outstanding wages. Outstanding wages amount is 1,600 rupees. So outstanding wages is 1,600 rupees, that is here. So 1,600 rupees, this amount to, yeah, 1,600 rupees. Next, we have completed with the debit side, sorry, liabilities entries. Now we'll see the asset side entries of the balance sheet. So first entry is furniture. Furniture amount, I have showed a calculation also in a P&L account. That is a furniture amount is 20,000 rupees. In that we have a adjustment, that is for furniture 10%. So after calculating 10%, we got a 2,000 rupees. So deducting in a 20,000, we got a 1,800, sorry, 18,000 rupees as a furniture. Next, sundry debtors. Sundry debtors amount is how much? Sundry debtors is, you can find it. Sundry debtor amount is 25,000. There is a less bad debts. Bad debts amount is 1,200 rupees. This one. Bad debts amount is 1,200 rupees. I have taken it here 1,200 rupees. 25,000 minus 1,200 rupees. It is become a 23,800 rupees as a sundry debtors. Then next is a bills receivable. Bills receivable amount is 8,000 rupees. That is coming in a balance sheet. Bills receivable. So now we have adjusted with all the adjustments. These we are completed with the adjustments. So there is no adjustments left over. We have given a profit and loss also in a ratio of 2:1. Then We just pass all entries. Freehold premises. Freehold premises, it is 17,300 rupees. 17,300 rupees. And cash in hand and cash at bank are coming in a both side. These amounts coming in a asset side. This is a asset for the bank. Asset for the balance sheet. So cash at bank and cash at bank and cash in hand. So cash in hand and a cash at bank we have mentioned taken in a balance sheet, cash in hand and cash at bank, that was a 4,500 rupees and 16,000 rupees. Next is closing stock. When we are mentioning in the P&L account, that time only we are mentioned here in the balance sheet, that is a closing stock is a 30,000 rupees. Then insurance claim. Insurance claim from the insurance company, it was a 2,000 rupees and prepaid rent is 3,000 rupees. So next amount is prepaid rent is 3,000 rupees. We are taking a 3,000 rupees in a balance sheet. Asset side prepaid amount is rent is 3,000 rupees. Then what we need to do? We need to calculate all these entries. So we passed all entries in the balance sheet and P&L account and trading account. So now we'll see how much the total amount coming in a balance sheet asset side. 1,800 18,000 rupees, 23,000 plus 23,800 rupees and 8,000 rupees plus 17,300 rupees plus 4,500 rupees plus the 16,000 plus 30,000 plus 2,000 plus 3,000. In total becomes it is a 1,22,600 rupees. 1,22,600 as a total amount. 1,22,600 is the total amount of the asset side. Now we'll see the liability side total amount. 39,000, 22 plus 22,000 plus 48,000. Now 6,500 rupees plus the 1,600 rupees plus 3,000 rupees and 1,600 rupees. We need to add this whole amount. Then we got a 1,22,600 as the total amount. 1,22,600 the total amount. So both side we got a same amount, that is 1,22,600 rupees plus 1,22,600 rupees as a both side. So when the both entries are coming in a liability side and asset side entries are coming both side is equally, then the problem is correct. First, and this is the balance sheet. Balance sheet we calculated. Now we need to calculate. Now I'll show you this using trial balance we calculated. So using trial balance we calculated a trading account and a P&L account. In a P&L account mainly we are doing this one opening stock, and we need to see first to start with the opening stock, then closing stock, then sales and sales returns and purchase returns, and need to calculate a gross profit passing other entries, and we need to calculate the other entries of trading account. Next is, then using this gross profit amount we are passing this in a P&L account, then we are calculating further entries. So indirect all expenses will come in a debit side and indirect incomes coming in a credit side in a P&L account. So we added this amount and we have adjusted with the adjustments. So there are 6 adjustments. Using 6 adjustments we calculated P&L account and balance sheet. So in a two insurance, outstanding expenses and outstanding wages, these are the things we have calculated. Then finally we find out the net profit. If the amount is more in a credit side of the P&L account, so that amount will transfer to that will become a net profit. That amount in we are deducting with all the entries, then we are totaling the both side amounts, the balancing both side amounts. This is the calculation of a trading account and a P&L account. Now we'll see the uh, balance sheet. Balance sheet is here this side. So in a balance sheet, So that P&L account net profit amount, P&L account will find out the net profit amount. That net profit amount will transfer into capital account. So like this net profit amount is transferred in a balance sheet. Transferred in balance sheet, shares amount and uh, Mrunal amount is transferred to the capital account. Then they have a closing opening stock also. So they have mentioned it here. And later on sundry creditors and outstanding expenses, what are the outstanding expenses are there, so that we are mentioning it here. Then later on there's a furniture with the adjustment, we had a depreciation 10% on furniture. And sundry debtors, we always have a bad debts and RDD, reserve for doubtful debt, that adjustment will be there. So in this problem there is no problem, there is no adjustment for the RDD. So next onwards, next all the entries are coming same, the whatever the entries coming in asset side of the balance sheet, then we entered. And next is a closing stock. We are taking it in a P&L account and P&L account also, and in a balance sheet also. So we got a amount as a 1,22,600 rupees and 1,22,600 rupees. Using these adjustments, we calculated P&L account and balance sheet. So this is how we are solving the problems. So this is the sixth problem we solved. Thank you.